Hey there, and welcome to This Explainer. If you've ever stared at a price chart and just felt completely overwhelmed by all the dense jargon, the erratic lines, and just the sheer chaos of the whole thing, well, I've got some great news for you. You can completely master this. The secret? We just have to change how we look at it. We've got to stop thinking of the market as some complicated spreadsheet and start viewing it as a massive, real-time, multiplayer video game. Okay, let's dive into this. When you open up a chart, those aren't just random numbers ticking up and down. That chart is literally the ultimate digital battlefield. It is a high-stakes player versus player arena where millions of participants are fighting for control. On one side, you have the buyers. On the other, the sellers. Every single green and red candle is a footprint of their combat. If we can learn to read the map, understand the players, and spot the power-ups, we can absolutely beat this game. Think of this right here as our main menu. We've got 6 stages to clear today. The 2-player market game, meeting the dominant players, supply and demand zones, breaking structure, spotting key chart patterns, and finally position management and options. You ready? Let's press start. All right, stage 1, the 2-player market game. Let's get a feel for our arena. And this brilliantly illustrates our heads-up display, or HUD. Now, there isn't just one magic way to track market structure, but look at how this setup tracks everything right from the daily open. By focusing on how price action develops from the opening bell, you get a crystal clear directional bias for the match. Are the candles forming initial highs and then pushing past them? Tracking these moves shows you exactly which team is winning the early rounds. Moving on to stage 2, meeting the dominant players. Time to hit the character selection screen. So in every single trend, you've got a dominant market player and a subdominant player. Think about it. If we're in an uptrend, the buyers are the dominant ones. They've literally got the controller in their hands. They're pushing the price higher and dictating the whole pace of the game. The sellers, well, they're subdominant here. They have virtually zero power. At best, they can only manage these weak counterattacks, which just look like temporary retracements or pullbacks on the chart. Now, if the market is in a downtrend, reverse it. Sellers hold the controller, and buyers are just along for the ride. To win, you must figure out who the dominant player is and simply join their team. Stage 3, supply and demand zones. Let's talk about where the big players spawn. This takes us a bit deeper into the map design. If you've ever played a multiplayer shooter, you know all about spawn points, right? Those areas where a team regroups. Well, the market has them too, and we call them supply and demand zones. These are not just thin, fragile support lines. These are literal spawn points where major institutions show their hands. And they don't buy all at once, no way. They stack their orders in a grid, building massive positions over an area. So when the price returns to a demand zone, it's hitting a brick wall of buy orders. When it hits a supply zone, it's running headfirst into a fortress of sellers. So how exactly do we find these spawn points? Honestly, it's kind of like a cheat code. Let's say we're hunting for a supply zone, what we'd call a rally-based drop. Step 1, you find the absolute highest point, the wick of the base candle. That becomes the top line of your zone. Step 2, you find the lowest body, either the open or the close, of that exact same base candle. That's your bottom line. Step 3, draw a rectangle connecting those 2 lines and just extend it all the way to the right side of your screen. Boom. You've just mapped out exactly where the enemy team is waiting to ambush. Stage 4, breaking the market structure. It is time to look for those crucial momentum shifts. Okay, so you know the players, you've learned the map, but how do you spot the exact moment the subdominant player just rips the controller away from the dominant one? Enter our combo breakers, the break of structure, or BOAS, and the change of character, or CHACH. Now, these aren't magic indicators. This is pure price action. A break of structure is when the dominant player successfully shoves the price past a previous high or low, proving, hey, I'm still in control here. A change of character, though, that is the ultimate momentum shift. It's the very first real signal that the subdominant player has suddenly leveled up enough to break the trend. Now, what's really interesting about this slide is how it proves who actually has control. Because to see a genuine structural break, you absolutely have to identify your true swing highs and swing lows. Notice how a true swing low has a candle with a lower low, flanked by higher lows on both the left and the right. A swing high has a higher high, flanked by lower highs. It's only when the price breaks past these specific confirmed external swing points that we have a real confirmed shift in market control. All that internal noise in between totally doesn't matter. Okay, let's look at the replay on this execution. We've got this beautiful downtrend going, lower highs, lower lows. The sellers are totally dominating. But wait, the price suddenly surges and breaks right above that previous swing high. That line right there marked boss, that is our break of structure. The buyers just snatched the controller. the structure has completely shifted from bearish to bullish, and as the price pulls back down into a demand zone, or spawn point, that is exactly where you trigger your buy signal. But gamers, seriously, beware the lag. You've got to watch out for the fake-out trap. Look at this action here. You see the price pushing up, it breaks a tiny, insignificant level, and everyone thinks, yes, the buyers are back. Way too many eager longs spawn in all at once trying to catch the reversal. But they didn't wait for a true structural break. The dominant sellers were actually just reloading, and they immediately punished those early buyers, sending the price crashing straight down to new lows. If you jump the gun before the structure is actually broken, you are taking massive damage.
Stage 5. Spotting key chart patterns. Let's look at some specific environmental cues.
As you play this game longer, you'll start noticing specific level designs that basically visualize the battle for you. Take this classic piece of architecture, the cup and handle. The price drops, rounds out at the bottom, forming the cup, and then there's a small pullback. That's the handle. But here is the absolutely critical rule. Do not execute your attack early. You must wait until the first price bar firmly closes above the lip. That close, that is your confirmation that the buyers have truly breached the fortress walls.
Let's move to and see how this visual geometry builds with another formation, the saucer pattern. This one is super cool because it actually gives us a calculated target trajectory for our attack. By measuring the distance from the very center of the saucer back to the significant high that preceded it, we can project a target. And that target is typically about 6/10 of that distance to the right and halfway up the scale. So this isn't just about wildly guessing where the price will go. It's about calculating a highly advantageous reward-to-risk ratio before you even enter the match.
Stage 6. Position management and options. Welcome to the boss fight mechanics.
To survive these hardest levels, you need advanced power-ups and some really strict survival rules. I like to think of these different option strategies as your character loadouts that you could equip before a really volatile match. Expecting a massive upward surge, you equip the long call build. Think the floor is about to literally fall out from under the market? Grab the long put. Want to hold your ground and generate some passive income while you wait? The covered call or short put is your defensive loadout. And if you already own the asset but just want some armor to protect your downside health bar, you equip the married put. You're tailoring your loadout exactly to what you expect the game engine to do. And finally, here is the ultimate pro gamer move, scaling in. Remember that nasty fake-out trap we talked about earlier? Well, this is how you beat it. When the price breaks structure, you don't go all in right away. That's a rookie mistake. Instead, you enter with 50% of your position size on the breakout. Then, you just wait. You let the price come back to retest that broken level. If the level holds and the price rejects in your direction, then you deploy your second 50%. Your average entry price might be slightly worse, for sure, but your losing trades will be significantly smaller and way cleaner. So the crucial point is really captured perfectly here. If the retest fails, we don't add, we exit, or accept the stop. Both of your entries essentially share the exact same invalidation point. If the market breaks back through your level, the strategy has failed. You take the damage, you accept the stop loss, and you wait to respawn. You never, ever hold on to a losing position and let your account hit zero, because that is exactly how you get a game over. Well, we did it. We've cleared all the stages, we've mapped the HUD, found our spawn zones, identified those structural combo breakers, and geared up with our optimal loadouts. The market isn't just some chaotic mess of lines anymore. It is a beautifully structured environment governed by rules, supply, and demand. So the only question left for you is this. Are you ready to choose your player, master the zones, and finally conquer the game of market structure? Get out there and play to win.